welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at Exchange and ETF Experience, where we're meeting with the top thought leaders and innovators in the ETF space. Joining me for this segment, we have Kelly Ryan, Head of Independent Wealth Management at State Street Global Advisors, and we're going to talk about one of the most important trends we're seeing in the ETF space. Of course, it's a resurgence of the retail investor. Kelly, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me, Jill.
And really, the resurgence of the retail investor as a result of the pandemic has been the story in your space.
Absolutely. We saw 25 million new retail accounts opened over the last 2 years. That's just unbelievable growth in the self-directed retail space. And those investors are really looking to buy stocks, bonds, and ETFs.
Yeah, and the inflows have been pretty significant in ETFs. What are retail investors looking for there?
So they're looking for diversification. It's a lot easier now for retail investors to go out and buy ETFs. Many platforms make them available commission-free. And ETFs will provide that diversification as well as tax efficiency. They're easy to trade, and they're transparent vehicles.
Are ETFs created equally?
Always know what you're buying. You can have many different ETFs that go by the same name or listed in the same category, but we encourage investors to look at the underlying securities so that they understand what it is that they're truly buying.
And doing due diligence is key, of course, as well.
Absolutely. You want to look at things like trading volume, you want to look at cost, you want to look at liquidity of a product, but also know what you own. Know what the ETF is made up of. Or does it own 25 stocks? Does it own 500 stocks? There's a big difference there, and so doing that due diligence and research is really important.
Tell us about the low-cost investing survey that you put out in July.
Yeah, so it was really interesting. We went out and looked at many individuals within the retail space. We found out that investors were concerned about things like inflation, and they were more concerned about these issues than they were even about cost. And so what we came to the conclusion was that looking at expense ratio is not just everything. You need to look at the entire profile of the fund in order to really understand what that cost is. Cost is so important, not only trading costs, but what came to light was that individual investors really thought that in their mutual funds, all of the fees were wrapped up under their advisory fee, and they didn't understand the many different fee components of buying a mutual fund. With an ETF, it's very transparent. There's an expense ratio and there's a trading cost. Many of those platforms have eliminated trading costs, so it's much easier to get in and out of. So we found out that there's a lot of education we need to do in the marketplace.
When you look at the ETF cost overall, are they actually low?
For the most part, you know, everything is relative, but you look at anything in the core space, it's going to be, you know, just a few basis points. Our average low-cost fund is about 6 basis points. That's very, very little in terms of an expense ratio.
All right, Kelly, we appreciate the insight. Thanks for joining us on Trade Talks.
Thanks so much, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.